Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Ardan Imam Rashid, and today I'm gonna talk about financial statement analysis. Without further ado, let's straight to the point. For entrepreneurs, financial statement analysis is an important thing to do. Why is that? This is because a financial analysis will illustrate the health of the company. This method can also improve the development of the company. If the company is growing well, it means that the company's goals are getting closer. In general, it is known that finance is indeed one of the most important component in describing the success of a company. Success can be measured by how healthy the financial condition, as well as the rate of profit and stability in it. Thus, financial reports are needed to manage a company health. For more details on this, see the review below. Next, definition of financial statement. Before moving further on the analyzing of financial statement, it is better to first learn what financial statements are. This report is a record containing financial information in an accounting period, which will be used in describing the company's performance result. Financial statements themselves are part of the financial reporting process. This activity is usually carried out by audit parties in government agencies, firms, accountants, and other institutions. The goal is to ensure accuracy and objective related to financing tax or investment. Basically, financial statements are divided into balance sheets, income statement, cash flow, and change in capital. These types are useful sources of information. The report will also be used by the company or stakeholders. The information in the report also cannot be taken for granted. This is why analysis or financial statements are necessary. The goal is to provide accurate, in-depth, and accountable information. This analysis is done to examine the report as a whole. Next, purpose of conducting financial statement. The main purpose of analyzing the financial statement is to find The main purpose of analyzing the financial statement is to find the basis for strategic decision making and the basis for information about the value of the business. However, there are several more important purposes why this analysis is important, including the following. The first, understanding the company's potential to pay its debts and interest, both long-term and short-term. Next, understand the company potential to utilize assets to generate profits. Next, know the change in financial position in a period. Next, project what the business will look like in the next period. And next, assess the performance of the business in the current period. And next, comparing the company on one value with the competitor. Next, identifying financial parts that are having problem. And next, be a consideration for investor if they want to invest in particular company. Next, types of financial statement that can be analyzed. At the beginning of the discussion, it was mentioned that there are a number of different types of statements that can be analyzed. In analyzing, the accountant or company owner must use different methods on different financial statements. Before that, what are the types of financial statements that can be analyzed? The first, balance sheet. In accounting, a balance sheet is a company financial statement, which include information on asset, payment obligation to related parties regarding operation, and capital in a certain period. The component in the balance sheet is asset history data. The history data contains all sorts of capital or finance, either from capital holders or debt obligation. The balance sheet can be prepared into two formats, namely the T form, control, and the report form, stable. Next, the second, profit and loss statement. This report will show the financial situation of the company, whether it is in a loss or profit condition. Usually, there are many records of company loss and profit in this report. The records are obtained from the result of product sales and expense incurred by the company. This report is generally prepared at the end of the accounting period of year, and income statement can also make it easier for investors to learn and understand the performance of a company. There are two formats of these reports, namely the direct form single step and the schedule form multi-step. The direct form means that all categories of income and expense are calculated at once. Then a nominal profit or loss is obtained, while in the gradual form, grouping must first be done on the categories of income and expense. The third, statement of change in financial position, cash flow. This report will show the accountant or manager what the company's cash has been used for. This means that manager can monitor all the sources and how the company's funds are used. This report is crucial in financial statement analysis because of the cash flow of the business, also referred to as the cash flow statement. It includes three main activities, include financing, operating, and investing activities. Next, financial statement analysis methods. In analyzing financial statement, there are certainly several methods that can be used. Broadly speaking, there are two methods in analyzing. The first method is the horizontal method, while the next method is the vertical method. The first, horizontal analysis. The horizontal analysis method is a method of comparing edges of the same items in the financial statement with different periods. Usually, the comparison to be analyzed is based on two or three earlier periods. This method is also often applied by comparing the percentage increase and decrease of financial item from the period being compared. Thus, this method is often called the dynamic method. In addition to the above methods of financial statement analysis, there are a number of other methods applied in this horizontal analysis, including the following. And well, thank you, and wassalamualaikum warahmatullahi wabarakatuh.